Hi dear traders! According to the Wall Street Journal, some FOMC members intend to ease the pace of monetary tightening and are going to vote for slowing the rate hike at the next meeting. Naturally, investors reacted to this news and began to take profit on long positions on the US dollar. But this can just be another move to push the dollar quote a bit lower in order to buy it later at a more attractive price. At the end of the previous week, the US dollar index, which demonstrates its value against the basket of 6 major currencies, dropped to the level of 112. At the same time, markets still expect the Fed to raise the rate by 75 basis points at the next meeting in November, while in December the pace of growth may slow down. European currencies took advantage of the situation and started a correction against the US dollar. The most traded pair on forex, the euro-dollar pair, rose to the level of 0.9880. The European Central Bank is also expected to lift the rate by 75 basis points at its October meeting. Investors hope that the regulator won't change its plans for fear of a recession. However, the inflation rate in the region is so high that one round of rate hike may not be enough. Therefore, as the economic situation in the Eurozone worsens, the euro may resume its fall in the near term. The British pound also managed to win back some losses by the end of the week. Yet we should keep in mind the high level of political uncertainty in the UK. Its Prime Minister Liz Truss decided to resign. Moreover, all macroeconomic data keeps showing the contraction of the economy. The Bank of England is actively fighting inflation and struggling to stabilize the pound and the financial market, thus putting more pressure on the economy at the same time. Among all other currencies, the Japanese yen needed a breather for most. Lately, it has been rapidly depreciating against the US dollar. The Bank of Japan tried to prop up the yen and made currency interventions. Notably, Japan's central bank prefers to maintain an ultra-loose monetary policy to support economic recovery, unlike the ECB and the Bank of England. At the same time, this contributes to the weakening of the yen in the foreign exchange market. In the course of the year, the Japanese currency has already lost 30% against its American counterpart. Gold is also suffering from aggressive monetary policies by global central banks. Higher interest rates make government bonds more attractive as an investment instrument compared to precious metals. However, thanks to the Wall Street Journal news, the curve of the US Treasury yield inverted slightly, which in turn sent the price of gold higher to $1,660 per troy ounce. Meanwhile, oil closed last week at comfortable levels. Brent crude was trading at $93 per barrel. Oil has some upside potential as investors hope that China will start to consume more energy as it is recovering from the pandemic and steadily lifting coronavirus restrictions. Besides, market participants keep in mind the OPEC Plus decision to cut oil output by 2 million barrels per day starting this November. Moreover, the ban on Russian oil imports to Europe is approaching, which only accelerates oil prices. These are the trends of the last trading week. Also, do not miss our weekly review, which is due tomorrow. Feel free to leave your questions and comments down below. See you soon.